insiders obscure reporting, and politicians provide protection to related companies. So low quality information is not penalized. So politically connected firms, lower quality earnings. So this seems to be not consistent with the earlier paper that showed that politically connected firms were associated with higher market value. This is saying, hey, politically connected firms are associated with lower quality earnings. Now, if quality of earnings was worse, then you would expect stock returns to be worse because the market relies on the quality of information. This has already been established. So here again is another area of research crying out, another area that's crying out for research to reconcile this. And that's why I said that this is an exciting area which is just developing. And they provide the reasons for this. As I said, insiders obscure the reporting, and low quality information is not penalized. So in countries where there are politically connected firms, the quality of earnings is weaker. Now, this is an interesting paper because it comes straight to back closer to at country level rather than cross-country. Now, cross-country information, looking at like 60, 70 countries and doing regressions has its problems. But you're dealing with aggregate data. And aggregate data sometimes does not tell you very much. And that's why you start looking at consumer behavior at the micro level. You look at a small group, experimental approach. You need to understand what is happening. And you might find that results are not consistent if you do it in an experimental group and then you look at aggregate data. If you're just talking about the exchange rates, you have flexible and fixed exchange rates. Now, if you're a banker or you are central manager, you are the central banker, or if you had to make a choice, how would you make a choice? That's an interesting study because it goes back to what Professor Christina was talking about, Kristen Lee was talking about. It's the mental accounting where you have somebody, a person who might be progressive, promotional, or somebody who's defensive. So it looks like it's possible to make a case that somebody who's defensive will prefer the fixed exchange rate and somebody who's promotional would prefer a flexible exchange rate because of the risk involved. Anyway, coming to this paper, American Economic Review is incidentally the #1 journal in economics. It's by Fishman, and it was published in 2001. The issue is interesting. Do firms connected to Suharto suffer stock market losses when there were rumors about Suharto's health between 1995 and 1997? Now, those of you who can remember, I'm sure you can. 1995 to 1997, there were rumors that Suharto was seriously ill. But do remember that Suharto had links to many companies in Indonesia. Now, so what they did was they looked at firms connected to Suharto and gave them a ranking of 1 to 5. Now, those that were ranked 1 were the least dependent on Suharto, and 5 was the most dependent to Suharto. And scores of 5 were given to those firms that were owned or controlled by Suharto's children, Bimantra and Citra Lamantoro groups. Also longtime allies of Suharto, Bob Hassan, Liam Xiao Leong, Prajo Panggastu, well, that's a bit of a tongue twister, Barito Pacific Group. Okay, so, and then scores of 1, of course, they have gradations of that, by the Bakri brothers. So, firms were ranked from 5, 4, 3 to 1, depending on how close you were to Suharto. And then they looked at stock returns. And this is what they found. There were 5 episodes of Suharto's announcement of his health. There were 5 episodes. These were the dates. And the last one, which is the one that is bordered by red, actually had the biggest impact on the stock prices. So what does this say? This says that political connections actually does have market value, because the moment the news was that Suharto was in deep trouble and was dying. Stock prices just went down. So that's Indonesia. Then we come to Malaysia, and one of the best papers in 2003 in Journal of Financial Economics was Johnson and Mitten. Again, Journal of Financial Economics is an AA star journal. It's one of the top 3 UTD ranked journals. And they looked at cronyism and capital controls evidence from Malaysia. Now, you see lots of newspaper articles, lots of speculation. These capital controls were smoke screens. They were meant to assist cronies and so on and so forth. But that's not scientific. Here, these guys look at the data, and they look at it very closely. And they focus on capital controls in Malaysia in 1997 during the time of Mahathir. And they identified certain firms that was in Gomez and Jomo's book, 1997, where Gomez and Jomo did a book, a sociological perspective of politicians and firms, and they extracted the names of firms that were supposed to be politically connected. They also checked annual reports, newspaper reports, and so on. Now, again, the same guy, Olson, 1965, 1982, they based it on one of his papers, which argues that political connections and collusions reduces efficiency. And the question then is, are capital control designed to provide subsidies to politically connected firms? And what did they find? They found that firms with political connections suffered more when macroeconomic shock hit the Malaysian market. This was the Asian financial crisis. Why? Because the government was not able to provide privileges and subsidies. They were themselves facing a financial crisis. But these same politically connected firms benefited more with the imposition of capital controls, and they were provided with higher levels of subsidies. So they used stock returns as their outcome, market outcome measures. Now, Malaysia at that time had a very liquid stock market, so looking at stock returns is justified. Now, this is the list of politically connected firms in Johnson and Mitten's paper. It's quite interesting. They identify the various individuals who are connected to each of these firms. These are the connected major shareholders. I'm sure some of these names are familiar. And then you can see at that time, there was Anwar, Mahathir, and so on and so forth. These are all the primary political connections. And in the next page, of course, you have more of this. You don't have to worry taking photographs of this. The paper is available. Johnson and Mitten, I've just given you the reference. It's available. If you can't find it, I can tell you that Monash University Library has got that journal. You're most welcome to come and have a look at it. Okay, has a sequel. It's my paper because I was interested, because quite a lot of my work is in auditing, and auditing data is available. So, okay, the market reacts in a particular way, but my cousins, the auditors, how did they respond to this drop in market value, and then there is a surge in market value of politically connected firms? So I collected data from Malaysia during this period, and of course I had to do the work by myself. As you see, it's a single-authored paper. I didn't have much help. Now, Johnson and Mitten provide insights into how the market reacted. But remember, there are other components in the system, such as auditors, and they are also likely to be affected. It would be naive to think that they are not affected. And so the analysis in Johnson and Mitten suggests what? That auditors would assess Pecon has higher audit risk during the financial crisis. Why? Because of the likelihood of business failure. Remember, the stock prices are going down sharply, so higher risk. And there's also a possibility of misreporting, and there is quite a lot of theory suggesting that when stocks go down, firms have a tendency to overstatement of financial statements. What did I find? Greater increase in audit fees for Pecon firms than for non-Pecon firms during the financial crisis, consistent with Johnson and Mitten. However, after capital controls were implemented, there was a decline in audit fees for Pecon firms. So this, side by side, if you juxtapose these two, the results are very consistent with Johnson and Mitten. So this is the graph that's in the paper. Again, it shows that the Pecan firms, the audit fee went up, and then it went down. Non-Pecan firms, there wasn't much of a difference. And that is the pre-financial crisis, and then the capital control. This was all put into one regression, and these are the results. Okay, more recent Journal of Banking and Finance with Mark Bliss and myself. We looked at Malaysia, and we were interested in political connections instead of cost of debt, cost of equity. We were interested in cost of debt. We had 500 non-financial public listed companies. What did we find? Pecan firms have significantly higher leverage, higher likelihood of reporting a loss, higher likelihood of negative equity, and higher likelihood of being audited by a big audit firm. Basically, this captures the results. Pecan firms, I've just simplified this so that many of you are not accountants. Or non-Pecan firms will charge lower interest rate. This is bank interest rate, and this is fortunately available. Excuse me. Fortunately available in the financial statements is under interest expense. So you take this interest expense and divide it by opening and closing debt, and you get an interest rate. And here again, Pecan firms are charged higher interest rate. So this is quite interesting. Some working papers that are almost finished. There's one with Dr. Fu here from Monash. We started looking at stock liquidity in Malaysian firms. We were interested in the role of politically connected firms and asset liquidity. We wanted to see whether Malaysian politically connected firms, asset liquidity, and firm stock level affected firm stock liquidity. We measured stock liquidity in many ways, stock turnover and the illiquidity ratio. Remember that stock turnover is the turnover of shares, and clearly if there is a high level of shares being sold and bought, then it suggests that the market is liquid. And we find that Pecan firms are associated with higher levels of liquidity. And we brought in the issue of asset liquidity. Asset liquidity is just the level of cash. There is an evolving theory that suggests that if you have high levels of cash, you are more likely to have higher asset liquidity. Okay, the last paper is also a working paper with one of my staff, one of my colleagues, Sadia Munir and myself. Here it's quite interesting because we find that 10% of Malaysian corporate boards are either all Malay or all Chinese. That's very interesting. That's a feature that doesn't exist in many countries, because in the US, 90% would be all Caucasian. And here we have boards that have got Chinese, Malays, and Indians. And so we collected this data over the period 2005 to 2009. We build on a theory that's evolving in management on ethnic diversity on corporate boards. That actually, if you have diverse ethnicities on boards, it does make for better decision making and higher quality decision making, which leads to higher firm values. So the question, we are looking at several issues, but at this point in time, the paper that we have done is looking at whether ethnic diversity on Malaysian boards affects the cost of debt again, and which is a component cost of equity. How does ethnic diversity interact with Pecan? Now, both the papers look at cost of debt. Now, this is important because bankers are sophisticated lenders, and before they are willing to give you a loan, they assess your standing, and then the interest that they charge is a reflection of how much of risk they attach to your company. So based on those ideas, we find, incidentally, before I go further, this is how we measured diversity. It's an interesting way of doing it. Here's an example. If on the board there are 3 Malays, 4 Chinese, 1 Indian, and 1 others, then the index will be 0.667. Now, of course, if you had 9 Malays, then it's 9 over 9, it's 1, 1 minus 1 squared, you end up with 0. So, end up with 1. So what you have here, actually you end up with 0, I'm sorry. Getting tired. So you have scores for ethnic diversity. Now this has not been looked at seriously. There have been some papers on ethnic diversity, but there is no rigor in the way diversity is measured. And here are the results. I've just simplified it. We find that actually politically connected firms, higher cost of debt, but if the firm has an ethnic diversified board, then the adverse impact, the adverse effects of PCON is mitigated. So it does speak well of ethnic diversified boards. Separately, when we analyze ethnic diversified boards, we find that they also attract lower cost of debt compared to non-ethnically diversified boards. Now, there's a lot of room for research. Hopefully, we have, the university will give us support to employ more staff, more competent staff, give us more research funding. You can see from here that we are sitting on a threshold ready to move forward, but resources have to be given to us, hint, hint. Okay, summary then, cross-country. We find cross-country, okay, 40, 50, 60 countries. I already mentioned the problems of aggregate data. You need to do some, to gain better insights. I think the experimental approach, the qualitative approach is important. Then you have triangulation and better understanding. And thanks to Christina for getting me interested in that area. I appreciate it. Higher earnings management, lower quality earnings. We find that. PCON firms, lower cost of capital. In Malaysia, higher market value, PCON firms, up, lower audit fees, okay. Higher borrowing costs, which is not consistent with the higher market value. Board ethnic diversity matters, moderating role, and you have also PCON firms have higher liquidity. Now, when you put all this together, you need to try and consolidate and bring these different ideas together, but these are empirical issues and they cost a lot of money because you have to collect the data. In Malaysia, different universities seem to be collecting similar, they may not be doing this, but similar data. And yesterday I gave a talk in ECAPT to a group of registrars, deputy vice chancellors, bursars, and so we talked about the spending, research grants and so on. And 720 million, I think, in the Rancangan 10, 720 million was spent. Question was, what's the research output? Where's the research? So there needs to be more consolidation of scarce funds to use in developing good databases in Malaysia. And some of you come from different universities. You might want to come back and talk to us. We're quite happy to consolidate because this area of research is ripe. And the US, unlike many people who think that data from this part of the world is very difficult to publish in the US, you're wrong. The US editors are looking for good research from developing countries. So the mixed results provide us with fruitful avenues for research, and corporate political activity is here to stay. Just 2 days ago, I was listening to the news. I was I was not surprised that in the choice of whether ladies should be included as Church of England priests, I think you're following that, the new Archbishop tried to push it through. He couldn't. And speculation is that the laity was involved in political activity, including links with the Conservative and the Labour government. And so one can speculate that the laity was made up of majority Conservatives who don't believe that females have equal rights. Sorry to extrapolate there. But why shouldn't ladies be allowed or be considered priests? I feel that you just imagine 100 years ago, a female student couldn't get into Cambridge University, to the top universities in UK. Finally, they allowed that. Couldn't be a dean, couldn't be a vice chancellor. It's all broken down. I think this is probably the last bit in UK. I think the Church of England, the next round, will allow ladies to be priests. Thank you very much. Anything? I can stand here.
Thank you, Prof. Gul. We'll now open the floor for questions. We've got colleagues on either side of the aisle with mics. So if you have a question, just raise your hand.
My name is Anthony Gomez. Do I have to stand?
No, you can sit, please.
I was a bit puzzled about the empirical data between the cost of debt for politically connected companies as opposed to politically connected firms. You see, the general perception, I may be wrong, as a pedestrian I'm asking this question. You see, the general perception is the controlling heights of the financial institutions is in the hands of the government. They were the ones who have been supporting and perpetuating both relatively efficient companies as well as poorly run companies. So in that context, I don't know whether your empirical data is quite correct in saying that government-linked companies, they have to pay a higher interest. It's a general...
No, I think, Dr. Gomez, I think you are right. That's what the empirical, the aggregate data is showing. This is one of the shortcomings of when you use regression and look at it in terms of aggregate data, but the results are strong. Now let me just speculate here. It is also very possible that the politically connected firms are willing to pay higher interest, and the bankers also know they can squeeze the politically connected firms. And these guys perhaps don't question it, and that's the result. So again, what we need to do is go into this a bit more to try and understand it. So that... It's a symbiotic relationship. Possible. Possible. Yeah. Yeah. Yes, Professor Mahendran.
I think that's a very good discussion, but the argument that politically linked companies tend to pay higher interest. But if you look at the experience of Korea, including in the context of Malaysia, a lot of the politically linked companies are also well linked with financial institutions, and there's pressure for financial institutions to charge lower rates.
But the data, the empirical evidence is otherwise. This paper is published in Journal of Banking and Finance, which is an A-star journal.
Right.
So I doubt that the reviewers got it wrong.
But I think if you cut your data into developing countries, if you look at all the developing countries in the Asia-Pacific region, they have very strong government hands. And a lot of the politically connected government-linked companies from Singapore right up to Japan are all very strong government hands there. So if you just slice your data into developing countries, newly emerging economies, you may see a different
This is
result.
just Malaysia only.
No, I mean,
The one was cost of capital. Yeah. It wasn't, yeah, you are right. Slice it into developing, non-developing. Actually, I also think you should look at electoral systems, and I think you should also look at legal protection, ideology. So all that I talked about, and I said there's room for research, should be brought in there. But Dr. Gomez, I think that is correct, that it looks like perhaps the banks were willing, the companies were willing to give their connected banks, they might be connected banks, give them higher interest rates, maybe. Keep the bank afloat.
Excuse me, Professor.
Yes.
Yes. Some of the findings here, although I respect the findings, there are some disturbing nuances that I just need to ask or maybe clarify. When you talk about